one of the things that you accept when you decide I'm going to help these people, these excited startup people, is you're kind of accepting structural churn, because
Yes.
unfortunately,
Yes.
they don't all make it. How do you deal with that?
I needed to have some of my own capital going into the business, right, to hedge that risk, because you're exactly right. Another kind of angle there is you don't always get paid timely.
Yes.
Because they're very cash constrained.
Yeah.
So I know that, and I came into that just being prepared. I offer like a whole suite of CFO services, everything from controls and governance to fundraising, capital allocation, etc. But I would say probably 90% of the time, my prospects will engage me to do their financial model. And that's when they really see things come to light, because everything's there. You have the different scenarios.
Heather, welcome to Product Growth Stories. Super happy to have you on the show. So your firm is Sapphire CFO Solutions, and I'd love to hear just briefly, how did you get started as a CFO and fractional CFO?
Sure. So, I started my career way back in 1994. I started off in audit, one of the big six back then. Focus was on financial services. I've just always been intrigued. Can be a challenging space with a lot of nuance. So I soon realized, hey, I don't want to be an audit partner. So I kind of had my sights set when I left Coopers and Lybrand. I had them set on becoming a CFO. So kind of worked my way up, finally got my first CFO gig in 2008. And it was about an 80-person firm, private registered investment advisor. So I did that for about 8 years. They had some management changes. I was laid off. And I'll say fortunately, because that provided me with the opportunity to join a startup as the co-founder and CFO. And so this was going to 2016.
Yeah. And real quick, as we go through this journey, I'm curious, especially because I've known CFOs in startups and I've known them at, big, billion-dollar companies.
Yes.
It seems like a different job. Like, what does a startup CFO do other than make sure you don't burn all the money right away?
Yes. Well, so this particular startup, it was just an idea on paper. And so what I had to do there was just build out the finance function from scratch. Have had a head of HR role in concert with my CFO role since 2008. So I also stood up the AR function. So, I mean, gosh, starting from just an idea, of course, you're wearing the many different hats, but, you're trying to look at, okay, I need to build this business, but you also need to have that forward-looking lens, and think about it strategically, because yes, you have short-term goals, but you're trying to set the company up for the long-term goal, ability to scale. We were always hoping from the onset to either, merge or get acquired. And that is eventually what happened in 2021. I think being a big company, particularly like a big public company CFO, of course, that has its challenges as well, because it's a very public facing role. You've got your shareholders, on
earnings
a public
calls
exchange.
and all this.
Yeah, exactly. So it's different. I would say, in the beginning stages of the startup, it's very tactical with the strategic lens. And then that kind of balance shifts to the role becoming, more strategic as you get your Series A, Series B versus tactical. And then you actually have the money to build out a team, because it was me the entire time until we merged in 2021. So a lot of long hours, but the work was fun and the people were just wonderful.
Excellent. So you did some startup, and then where did that take you after?
Okay. So after the merger, the merged company, they had a CFO. So we have the tech, they had the money. So it was kind of, although it was a merger, they viewed it really as more of like an acquisition. But I got a great role at the company where I was a managing director and chief administrative officer of the entire tech division. Did that for a couple of years. Same thing. Didn't make it through a round of layoffs. So it was at that point I thought, you know what? I had been thinking about it for a while. Definitely want to start my own thing. So that was really the birth.
Take the plunge.
Exactly. So that was really the birth of Sapphire. And I just felt that, look, I've been a co-founder. I've been an operator. I've sat in the seat. I really know what the pain points are. And
Hmm.
so that really helped me focus, on my ICP, my ideal customer profile, which are, mainly CEOs and founders from pre-seed through Series B. I wanted to really kind
Hmm.
of stick with what I know, focuses on financial services, SaaS, and tech-enabled businesses. I just feel that I can add a lot of value there because
You
I've done it.
experience and
Exactly.
yeah, and
Exactly.
it's not typical, right? Like if you're in that area, you're going to have different needs than
A hundred
a
percent.
different kind of company, like a service business or yeah,
Exactly.
I love it. Okay, so and then one of the things that that you accept when you decide I'm going to help these people, these excited startup
Yes.
people, is you kind of accepting structural churn, because
Yes.
unfortunately they don't
Yes.
all make it. How do you deal with that?
So, I mean, you definitely, I needed to have some of my own capital going into the business, right? To hedge that risk because you're exactly right. Another kind of angle there is you don't always get paid timely because
Yes.
they're very cash constrained.
Yeah.
So I know that. And I came into that just being prepared. I have had the kind of payment lag issue, but fortunately I haven't had any of my clients churn or not make it. And I
That's
really
excellent.
see
Yeah.
that, I can at least go in there, add the structure, add the value that they need to get them to that next stage, which is really rewarding. But I would say, just being aware of that fact that there can be that churn,
Mhm.
particularly because I selected this segment of the market or understanding that,
Yeah.
hey, you might not
This
be
was not news
time.
to you. Yeah.
Exactly. Because I
Yeah.
don't want my stresses to spill over, right, into
Right.
my work or, in
So
any way be resentful. Because look, that's just the reality of the situation in that target
yeah.
market I've decided to pursue.
I'm sure that's the attitude helps. And I'm just like continuing on this theme because I also I know this pain too, somewhat. So, you know, at least in my opinion, when you're doing a service kind of business like yours, who you choose as your customer is a huge factor in how successful you and they will be, right? And if
Mhm.
you told me you just said that you still have clients that didn't churn, which kind of indicates you're picking well. Like you're picking. So how do you like? What are you looking for in a client to know? Okay, these guys they really have a shot at making it.
Sure.
That they're worth you investing your time.
Sure. I mean, the heart, of course, you want to see like a solid idea. And even if it's like extremely visionary in nature and they haven't really, thought through all of the operational aspects, of course, I want to see that. But the heart of it for me just really goes down to values. I don't want to work with a company that just doesn't have strong values. And
Mhm.
I can kind of get that from my first couple meetings with the client because I feel that, if that integrity is there, it just really carries through. And at least in my experience, things have they tend to work out because if you bring that into your relationships with others, I just, sometimes someone will cut you a break, right? Or you
Yeah.
meet the right people that want to help and propel your business forward. So that's a huge thing. I would say those are the top two things for me.
Hard
Um,
to like quantify that, but I know exactly what
mhm.
you mean. And I guess that's another benefit of having your own business is you don't have to work with jerks. You don't have to, you know, which is great. Okay, so you are, focusing on the startup segment. You have, what you're looking for. So what is it like when you work with a startup, like what is it that they don't know they need that you know? As the expert, of
Sure.
course, there's got to be a lot.
Sure. So I can kind of think I can encapsulate it, in a sentence or two. I feel like numbers tell a story, but most founders have not been taught how to read it yet. So what I'm trying to do is really build this cohesive narrative, with the numbers that tell the story, right? They really kind of highlight and magnify the vision and it just becomes cohesive. That growth story, it just becomes a really cohesive narrative. And I think that a lot of founders, what I found is, so they don't have a finance function. Either they have a bookkeeper or they have someone on the team that's maybe dabbled in finance, or they're familiar with, say, QuickBooks, and they're just, they're doing the numbers. Is very reactionary, if you will. And I really like to, and I think most of us, hopefully, really view finance as a strategic lever that you can use for decision making and really, create growth and really tell that story. I also find a lot of founders, so they don't have a financial model. That's kind of the biggest thing I see, because I offer like the whole suite of CFO services, everything from controls and governance to fundraising, capital allocation, etc. But I would say probably 90% of the time, my prospects will engage me to do their financial model. And that's when they really see things come to light, because everything's there. You have the different
If you're just
scenarios.
guessing or looking at like how much
Exactly.
cash is in what account before you have a real model, it's a night and day to have like an operating model.
Well, and you have the levers to pull, that's what's fun is, working with the client to figure that out. Like, what do you want to use the model for? You know, what are the important decisions, that you want to make and you want to be able to use the model for? And then incorporating, like I said, those, scenario analyses into the model so that they can pull certain levers. That's really when I see the aha moments. It just brings clarity, and it lends to really confident decision making. You're not, and you also want to make it user friendly, right? Finance can be intimidating to folks. And so when you do that, it's just, I really just see again that aha moment with a lot of founders.
Yeah. So I love that. So you're saying core things you're doing is creating an operating model so you can start to actually plan and use
Yes.
your allocate finances strategically instead of just, oh no.
Yeah.
And yeah.
Also, sorry, I didn't mean to interrupt. Also, I think, you want to get the leadership team on board and bought in. And so it creates also this level of transparency into the numbers. And additionally, then you can also use it to establish KPIs and hold people accountable. So there's just a lot of good that comes out of it, aside from just having clarity into the business.
That makes sense. Yeah. And so I'd love to hear who got your first clients versus what we're
Sure.
doing today. Cause I imagine it's
Sure.
not the same process as when you started.
So, okay, so I was telling you how, the last company after the merger, so I got laid off, going to do my own thing. So so I was all set, I was working on my website, and one of my fellow co-founders, he was the CTO of that merged company. He had left a few months before I did. He said he also does some business. He does some consulting for a private equity firm, specifically on tech. He said, Heather, I found this guy. He has an HR tech company, and we took a pass on their business because we just weren't comfortable with financials. They have no model, et cetera, et cetera. He could really use your help. He could be your first client. So I was like, oh my gosh, this is great. Because,
That's the best. Yeah. Teed up.
yeah, it was
Yeah.
just, within a month after I had been laid
Yeah.
off. So I contacted him, and what happened is he's like, oh, Heather, because I kind of call them like a 10-year-old startup. They were really profitable. They just needed the systems in place, the financial controls, and they were looking to sell the business in 6 months. So I knew it would be a short-term gig. Well, the 6 months turned into 18. But, once I had everything dialed in, we were working with a banker, I thought, you know what? Because I know that jobs is going to disappear as soon as we find a buyer for the business. So I thought, I have the bandwidth now. Let me try to, get my first client. And coincidentally, it was from my same, former co-founder. He invests in different companies. And he said, Heather, I want you in there to look at the finances, because that I just feel comfortable, they're going in the right direction. My investment, is safe, et cetera. So it was a referral from him. And so that was my first client in 2020. And then sure enough, in 2022, sure enough, in Feb of 23, right, we sold the business to a strategic buyer. And then that's when I really started doing just kind of my own. I didn't do heavy marketing. I really wanted to get, the name of my business, do the website, focus on kind of a referral based business to start. And then it's just
Hmm.
been honestly recently that I've really ramped up marketing efforts, which I'm primarily focused on LinkedIn. I know there's many different avenues I could go. Outbound, I tried it, didn't really work. And I know what I do with outbound, right? I just delete because I don't know the person. It's just helpful, I think, if you have a good understanding of how people think. And so really trying to push out content on LinkedIn, be a thought leader there. And then, if someone says they could just harken back to if they need a CFO, like, oh gosh, I remember, Heather Hall
Yeah.
from Sapphire,
Yeah.
you know,
They're in their minds somewhere. Yeah.
exactly.
Excellent.
Exactly. So
So as we wrap up, what are you the most excited about for your business in 2026? Like, what are you looking forward to do with it now you've
sure.
come this far?
Sure. So I'm really excited about growth. So it was just me, solopreneur, so doing everything. And, as I mentioned, the big thing that my prospects wants is that financial model. Well,
Hmm.
that's a lot of hours. It's a big chunk of time. I really need to be focused. And so it's very hard. Say if I were to onboard, say 3 clients at once, I mean, it's just, I can't get the work
You
done
get buried.
timely. It,
Yeah.
oh my goodness. Yeah.
Yeah.
I don't want to do 20-hour days. It's just not sustainable.
Yeah.
So I hired a financial analyst. Actually hired a financial analyst and an accountant in February. My analyst is absolutely wonderful. So that's just taken a lot of the load off of me and I can focus on biz dev, which I'm actually really enjoying. It's really fun to get out there, meet people. So that's been really helpful. And then the accountant, one of my clients wanted the accounting. I have a master's in accounting. Of course, I could do it, but it's not going to be the best use of my time.
Yeah. Yeah.
So I hired this accountant and they have bandwidth. So I thought, you know what, this is just a great service to add to my business. It's also another recurring revenue stream. So I'm looking forward to just maybe hiring another analyst. We'll see where I'm at the end of the year, but maybe hiring, another fractional CFO partner. It just being, I'm excited to grow, but, measured growth because the
Yeah.
client is the most
Otherwise,
important.
everything breaks and you lose your reputation.
100%. Yeah.
Yeah.
And want to be able to provide a good service and be
Yeah.
responsive. But that is what I'm most excited about, just because I've seen how much of my time has been freed up by just
Yeah.
having these two individuals on the team.
Yeah. And once you have a little bit of that structure, you start to see like, I could do this a little bit more, we can
Oh,
keep
yes,
going.
exactly.
Yeah. Well, excellent. It's been a pleasure, Heather. Thanks so
You,
much.
John, Michelle, thank you so much.